Okay, good afternoon, everyone. You're welcome to today's edition of the Indices Market Mastery class. I hope our day is going well. We have a small number now. It's 5 minutes past 1. So let's give an additional 5 minutes. Give an additional 5 minutes and see how many persons join us once it's 10 minutes past 1. Okay. So we will be giving an additional 5 minutes, and once it's 10 minutes past 1, we will start. You're welcome. Okay, I think we can start now. I wanted us to have some other persons join us. But we have a good number. Good afternoon once again. For those who are just joining us, I already addressed us. This is Market Mastery. So we'll do this into 2 o'clock, where we will begin the live trading session. I hope our day is going well, and I still hope our day is going well. So yes, it's been a while. I think the last time we talked was last week. And I really hope that between then and now, I have a good number of people who have made very good profit from selling indices like we analyzed the last time we were here. That was last week Thursday. We talked about throughout last week and upper week, and we talked about the strength of the dollar. And we talked about how that strength of the dollar was likely to continue for a while. And we talked about how it made more sense to actually look out for selling indices at any given resistance. We said selling at resistance was better because we're able to establish the fact that the index market was on a downtrend. And we advised ourselves then, we said it was better to leave your sales. If it was a sell you had, it was better to leave those positions open because you were trading in accordance with the trend. But we said that if you had buys, it was better to actually look out for closing those buys, especially when price retraces towards the nearest resistance. When price retraces towards the nearest resistance, you should be able to close those buys because of the downtrend that the market is actually on. This business is a business that can turn information into money. So I really hope and I wish that we have been able to turn the amount of information that has been given from the currency class and the indices class for the past 2-3 weeks now. I hope we've been able to turn it into good money, because information is not always correct. Yes, it's not always correct. There are times when we would expect something to go the one way in the market and it goes the other way. It goes to show you that even those who are professionals also miss it. And that's why what do you call now, risk management is important. But for you to have 2-3 weeks where the market is going directly in our favor, I expect that we've been able to make as much from it. Well, that's enough about that. Let's go into our chart, look at what level of analysis we expect in the market, and then we'll walk into the live trading session by 2 o'clock. Okay. Let me share my screen with us. Share my screen. Sorry, just a minute. Okay. Oh, sorry about that. Small network hitch, small one. Okay. Wow, we have a very, how is it that we have so many messages when we've not even started? What's going on? Dante James, need drawdown on D30. I hope that your drawdown, I really hope that what you're on is sell. If what you're on is on a sell, then I can say for you to hold on. You understand? I can say to hold on. But if what you have is a buy, what I would advise is that price is likely still going to push up on D30, for instance. Price is likely at least still going to push up to 15,419. Price is going to, wow. Oh, I don't like that 15,419. That 15 here around that place. So if price cannot break that resistance, then price will head back down. But if you're on a sell, I advise that you can hold on. You understand? You can hold on, especially if price does not break this verified resistance here, you can hold on, because D30 is on a downtrend. So the position you want to hold on to is it's just that it has really sold, because I'm looking at it. This is it on the daily time frame, and it's really sold, and it's looking like, you know, it wants to make a major retracement before it fall back down. So at this point now, it all depends on the amount of capital you have available. But this is what I'm going to advise for your sell position. Just relax. We have a strong resistance at 15,430. 15,430. So if price gets to, if price breaks above 15,430, should you consider closing that trade or taking a buy? You can also take a buy to, you know, minimize. Take a buy. I hope you have good volume, but you can take a buy with a higher lot size to minimize the loss. But if it does not break 15,430, then it's likely heading back towards your entry. Okay. Okay. So and that reminds me, and that is why I said that if you're taking a trade, you're trading D30, you're trading indices, you want to place a sell. I have always said that it's better to take that sell at a resistance. It's better to take that sell at a resistance than coming in and seeing price selling, and that is when you want to sell. You understand? You're going to put yourself in a position whereby you need to hold on to the market for a while and hope and pray. So your entry point, where you enter the market, is very, very important. Apart from the fact that you have made a beautiful analysis that price is going to buy. Yes, you know price is going to buy. Where you enter that buy is very important, because you can enter that buy at a position where you're very comfortable and you go into profit as early as possible, or you can enter that buy in a position whereby you have to wait and hope, and it is in a loss for a while, and then when it now comes to your position, you just close it. You just say, hey, thank God, close it in 200 naira. You understand? So even if you're looking out for a buy, your best bet is to buy at a support. If you're looking out for a sell, your best bet is to sell at a resistance. It's as simple as that. It's as important as that. Okay, good. So yes, I was talking about the fact that we're going to look into other strategies. We've been doing this for a while, even before we started calling it the indices class or thereabout. We've been doing it, and so for some persons, what I will be talking about today is not something that you're new to. Okay, within a week or two, we really looked at the EMA strategy, where we talked about selling once price can consecutively trade bearish, 2 bearish candles below the 50 EMA to sell, and once price can do 2 consecutive bullish candles above the 50 EMA to buy. Right, we did that. But today, what we'll be talking about is the use of the RSI. We're going to be using the RSI and candlestick patterns to place to trade. Okay, we're going to be using the RSI along with candlestick patterns, of course, support and resistance too, but the RSI is what we're going to be using to determine when to go into the market. So let us follow me as we go into this. Okay, so first things first, what is the RSI? Okay, what do we refer to as RSI? For RSI stands for okay. Yes. So when we're talking about the RSI, we're talking about the relative strength index. The relative strength index. Relative strength index, that's what it means. And let me apply it on the chart first so that we can see as I explain. Okay, so we can see as I explain the relative strength index. So to get that on my chart, I'll go to indicators list. Okay, and I'll check it for under oscillator. I'll check it under oscillator. I already have it at the top here, but for people who will be trying to get it for the first time, you go to oscillators. It's under oscillators, and you see it's relative strength index. So I can apply that to my chart. Normally, once you set that up, the default parameter you're going to get there is period 14. Just leave it like that. Okay, just leave it like that, and then you can select Okay. So here we have it. But this does not look bold enough, especially for those of us who are using our phones. So I'm going to make it bolder. Very good. So I'm going to make it bolder. Now, this indicator, remember that remember that indicators are all about mathematical tools. Indicators are mathematical tools. And what that means is that they are helpful in calculating. Okay, they are helpful in calculating, they are helpful in determining what and what and what. And with their calculations, we can easily tell this is where price is going, this is where price is going. Okay, so something like this, the RSI, the relative strength index, is very useful, it's a useful mathematical tool. Okay, in the sense that we can use this to determine the strength of the market, the strength of that particular move the market is doing, whether uptrend or downtrend. What exactly is the strength? And that's why it's called relative strength index. Now, there are two major zones that we use. Some people use, on your chart here, you can see that I have the 30 and the 70. By the right here, I have 0, I have 30, 70, 100 here like this. Okay. So we have the 30, the 70. Two major zones we're looking out for are the 30 and the 70 zone. The 30 and the 70 zone, because the 30 and the 70 zone help us to get the peak of the strength of a particular move. Okay, so the 70 zone gives us the peak. Okay, tells us that a bullish, when your line is at 70%, when your line is at 70%, it tells us that this particular instrument is approaching the peak of a bullish run. Okay, this particular instrument is approaching the peak of its bullish run. That's what it means. That's what 70% means. 70% on the RSI. This particular line here, this line here, this 70% line on the RSI line, the RSI is telling us that if this line, this blue line, is around that place, it's telling us that the bullish move going on in the market at the moment is approaching its peak. And what that means is that it may be more risky for you to be going in at that time for a buy. In fact, quite plainly, the term that is used when prices at the 70% RSI is overbought. The term that is used when prices at the 70% RSI is overbought. When prices are that zone, we always say price is overbought. When price is on the 30% line, we always say price is on the oversold region. Okay, so first of all, when you see that, you expect, when price is on the 70%, it's not a good place for you to go in for a buy. It does not mean that price may likely not continue buying, but it's just saying that around that zone where price is, there's a high chance that price would start going down because the strength of that bullish move is at its peak. Okay, so that is a very useful information. That's a very useful information. Why is that the case? It's the useful information because it's it will be very, very profitable if you can tell, if you can enter a market or enter a trend that's about to form as early as possible. So RSI can help us enter into a trend or enter into a market as early as possible. We can give one of the earliest signals for us to take advantage of a move. And it can give signals that are even earlier than moving average, earlier than stochastic, earlier than Bollinger Band, earlier than whatever it is. You know, because if we can use it properly, we can likely tell where price is headed early enough for us to make as much as possible from a particular trend. Okay, so we have mentioned that we have the overbought and the oversold. The overbought region is characterized by the 70% line, while the oversold region is characterized by the 30% line. And when price is on the 70% line, there's a high chance that price is about to begin to head downwards. Also, when price is on the 30% line, there's a high chance that price is likely going to begin to head downwards. Like, this is a good example. If you see this place here, at this zone here, price was at the 70%. And if you follow it up, you see that was around where price was here. And from that place, if someone had entered a sell from that place, at the place where market was overbought, especially because this instrument is on a downtrend, especially because this instrument is on a downtrend, if you had entered a sell at the top of that place, you'd have made a whole lot of profit. So, and the RSI, if people, I've explained this before, if a market is on a downtrend, for instance, people will go to the RSI on 1 hour. Anytime it is overbought, they will enter a sell from the closest resistance there. Anytime the market is overbought, they enter a sell. So it's all about the 30% and the 70% if you're using the RSI. It's all about the 30% and the 70%. Okay, so in this case here, price was able to approach that 70% and come all the way down. In this zone here, if you check this place, around this place here, price was able to approach the 30%, and from that place, price was able to what? Price was able to push back up to the nearest resistance. Price was able to approach the 30% around this. Okay, let me use the crosshair. Price was able to approach the 30% around this zone, and from that place, you saw a minor what? Retracement. Price has been ranging on this 30%, and around this zone, you can see how price was able to push back up. Okay, now the RSI alone is not may not give you the best of results. What I mean is that does not mean that immediately you see that price on the 70%, you just go and sell. Or immediately you see price on 30%, you just go and buy and expect a lot of profit. Yes, it may work, but you're going to get a better result if you combine RSI. If you combine RSI with either support and resistance, with either the trend, or with candlestick pattern. Remember, I have mentioned something very important here, and I hope that some of us have taken note of it, that if price is on a downtrend, for instance, you know that price on a downtrend, the way D30 is on a downtrend. If price on a downtrend, when your RSI shows you that price is overbought, you can look out for a sell from the nearest resistance. Okay, so if I'm using my RSI on this chart, I'm waiting for the RSI to tell me that price is overbought. From that overbought zone, I can actually comfortably look out for a sell from the nearest resistance there. And that will really, really reduce my risk for that trade. In fact, those are the kind of trades where I can use the biggest lot size that I can use compared with my balance. Do you understand? When you get entries like that where on a downtrend your RSI is overbought, you can enter a sell at the nearest resistance. Okay, can enter a sell at the nearest resistance. Okay, but I was saying that today we are going to be combining the RSI with candlestick patterns to determine what to do in the market. How do we combine the RSI with candlestick pattern to determine what to do in the market? How do we do that? How do we go about that? And that is why we're here today. Remember that about 2 weeks ago during one of our classes, the currency class, we talked of some candlestick patterns. We talked of the hammer and the inverted hammer, or the shooting star. Okay, we talked of that, and we also talked of the engulfing pattern. Okay, so some of those patterns are what we are going to be using today to combine with the RSI when we are trading. Okay, when we are trading. So let's move on. Oh, it's okay. Okay, seems we have a high impact news coming out in 2 minutes. Okay, we have final GDP and we have unemployment claims. Final GDP and unemployment claims. Well, So as it stands, if in the next 2 minutes, when this data comes out, in the next 1 minute, as our timer is here, if final GDP comes out higher and unemployment claims actually comes out lower, that will be good for the dollar, right? So I think we can just watch it and see what it does. I don't expect it to give so much move in the market, but let's see. We have about less than 45 seconds left till that data comes out. So we have final GDP and we have unemployment claims. But if both of them give different results, one is positive, one is negative, I'll just advise we stay off it. Okay, I advise we stay off that data. But if both of them give us positive, oh, we'll buy the dollar. We'll sell Euro USD, we'll sell GBP USD, we'll sell US 100, we'll sell gold. But if both of them come out positive, if both of them come out negative, that will weaken the dollar. Okay, so 8, 7, 6, 5, 4, 3, 2, 1. Okay, so we have, yes, still trying to load the data. See how it's showing pending. Okay, unemployment claim came out positive. Unemployment came out positive. What of final GDP? Oh, final GDP came out negative. So you know what? We have conflicting data on the dollar right now. It may likely even weaken the dollar. So I just advise that we hold on to the 230 session. That's what I would advise. Let's look at dollar index. Wow, you see, it's bringing it down. It's bringing the dollar down. It's bringing the dollar down. Oh. Conflicting data is bringing the dollar down. But if I would just advise we just let's hold on. Let's continue with our session. 230, we would see a bigger move to take advantage of. Yeah, we'll see a bigger move to take advantage of. Okay, let me continue. We were talking about the RSI, right? We're talking about the RSI and how that when you look at the RSI, you can easily tell when the market is overbought, oversold, to be able to take advantage of. Now, what we also said is that we will find a way to combine the RSI. The RSI on its own is not it's not a, you cannot get you can get, how do I put this? You can get a better result when you combine the RSI with other things, okay? Because the RSI on its own is not adequate enough for you to just enter a buy when it's oversold or enter a sell when it's overbought, okay? So there are patterns that you can use to help to determine where you enter into the market. So let's do that. Now, because this is the indices class, I'm going to use indices charts for this. Oh, look at how US 100 pushed up because of that data that came out. Yeah, it still has its own verified resistance up here. Okay, so let me add the RSI to this chart. Okay, good. Here we have it. Okay, now remember that we have said we all agree, or we all know that the US 100 for itself is on a downtrend, although some candlestick patterns show that it's likely going to begin to retrace back to the upside. US 100, it's likely that US 100 is going to begin to retrace to the upside, because if you check on this daily time frame, for those people who remember candlestick pattern, there are two things here. Number one, US 100 on the daily time frame has done a double bottom. A double bottom. That's when price falls to its support, goes up and comes back to that support. We expect it to go back up to do what we call a W. You understand? Apart from that, also yesterday's candle for US 100 closed as a hammer. So for people who remember when we talked of a candle like this, when you see a candle like this after a fall, you see a candle like this on a support, it's a hammer and it's a bullish candle. That's what it is. It's a bullish candle. When you see a candle like this, a bullish candle, and so you're expecting, or you're expected, it's expected that price will push up from there. You understand? So as it is like this now, US 100 on the daily time frame is looking like we're going to see a further retracement. Okay, further retracement to the bullish side. Okay, so let's continue. Now looking at US 100, I was explaining the RSI, and if you check around this place here, you would see how this particular instrument was oversold here, right? Was oversold, and from this place also happened to be a verified support. So your RSI is showing you oversold, but that's not enough. You now check support and resistance, and you find out that the market is on a support. The market is on a support around the same place where your RSI is oversold. That is a good place for you to look out for a buy. Okay, so your RSI is showing you that it's oversold. You want to enter your buy from the closest support around that place. You understand? Hey, the closest support around that place. That's what's important. You understand? Now, yes, US 100 is currently approaching a verified. There's a verified resistance here, which might likely not break, but I expect it to break it, at least because of what we saw on the daily time frame. I expect it to break it today, because we might likely expect a further retracement to the bullish side. Doesn't mean that the downtrend is over, but with what that candle did, yes, we likely expect a push up on US 100. But what I'm saying is that we are taking this buy. Why would we take this buy here using the RSI as a strategy? Why would we take a buy around here? We'll take a buy around here because on this support, our RSI first is showing us that this instrument is oversold, and we can also see that the instrument is on a support. That is a good place to buy from. So you can see that I have combined my RSI with something else. I've combined my RSI with support and resistance to be able to get a good entry point that I can take. You understand? Hey, so for instance, if my RSI was overbought, and price was at a resistance, price being at a resistance where my RSI is overbought, that would be a very good place for me to take advantage of a sell in the market. Okay, so that's what it's about. That is how in the case where we have used the RSI, let's look at for more zones in the market where price, look at, oh, very good example. Look at this place here. From here, let me mark that zone. The market already showed us that price was oversold within all this zone like this, but price continued selling. Look at it. Price continued selling. All this place like this was oversold until price continued from here like this was already oversold. Price continued selling until price was able to head back upwards from this support zone. And that's why I said that the RSI alone is not enough. It's not that because you see that price is oversold on the RSI, you just go and buy, or because you see that price is overbought, you just go and sell. You need something to confirm it. Okay, and one of those things are support and resistance. Another thing you can also use to confirm where to enter the market is candlestick pattern. Candlestick pattern. Now, if you check this place here, if you check all the candles from here to this point like this here, we did not really get any candlestick pattern to give us a bullish momentum in the market until from these zones here. From here, we had what we call three white horses. That's when you have 3 consecutive bullish candles after price has fallen. What I'm trying to say is that from the oversold point or from the overbought point, it's better or it's good to use a candlestick pattern. It's better to use technical analysis. It's better to use price action to follow that your RSI to determine where to buy or where to sell. So when your RSI shows you that price is overbought or price is oversold, there are candlestick patterns that you can use to now determine where and when to enter that buy. Where and when to enter that buy. There are candlestick patterns like that. And one of those patterns is the hammer or the inverted hammer. the hammer or the inverted hammer. Let's go back and check a period for US 100 here, since we are still on US 100. Let's go back and check a period where US 100 was overbought. And what? Okay, good. This is a good example. Around here, US 100 was overbought. From this zone here, we're going to mark it. Good. From this zone here, you see that US 100 was already overbought here, around here like this. And price still kept what? Price still kept pushing up to around this zone. But what is the deal? We will now notice that there is likely a candlestick pattern. So even when US 100 has shown us that it was overbought, we do not immediately go in for a sell. We are waiting for a candlestick pattern to tell us that price is about to head downwards. One of those candlestick patterns, for instance, is what? The inverted hammer. Look at this inverted hammer here. Now, normally when you get an inverted hammer like this, at the top of a candle, at the top of a bullish move, you get a candle like this, you're expecting price to actually what? You're expecting price to actually fall. And you always advise that it's also better if the next candle trades bearish, because when the next candle trades bearish, it acts like a confirmation, and that confirmation can help you, for you to sell. Okay, but from here, after this inverted hammer, we did not get a confirmation. Price continued to just range around that rejection zone. This is the wick of that inverted hammer. So even if you're on a sell here, your stop loss would have been above the wick of that hammer and will not have been touched. Okay, but from here, we had what we call three dark horses. At that resistance, that price was overbought. Price was overbought. And at this resistance here, we had three dark horses. That's three consecutive bearish candles. What do we do from there? We look out for a sell from there, and that's how to trade RSI. You can use RSI to trade retracement. You can use RSI to trade rejection in the market and really be very profitable with it. But the idea is you have to combine RSI with candlestick pattern. You have to combine RSI with support and resistance. You have to combine RSI with trend to be able to make very good profits. We're still going to look out for more examples of where price was overbought or where price was oversold. Look at this place here. Around this place here, price was already at the oversold region. So what are we waiting for? We're waiting for something like this. What is this? A hammer. Something that gives us a bullish confirmation. A bullish confirmation. And from there, you can take advantage of the buy. Please, what I want you to note with what I'm saying is that RSI is very, very effective. But you also need to combine it with something that will help you make the best or the most of it. Okay, and those things, I repeat again: support and resistance, candlestick pattern, and trend. Okay, look at this place here. RSI was oversold here, right? Oversold, and that means that from this support zone, price was able to what? Price was able to push all the way up from there. Even from this support zone, we're able to get three white horses. That's three consecutive bullish candles for price to what? Price to continue making its way up. Okay, and the list goes on and on. Of course, there are times when it's not 100%, but it really helps to reduce your risk of entering into the market at a wrong zone. You understand? Entering into the market at a wrong zone. Now, another thing is this: when you're using the RSI, very rarely, or in fact, very, very, very early, I don't think I've even seen it where price was able to get up to this 100%, or price was able to get down to this 0%. Okay, but the point is this: at the 70% zone, the strength of that bullish move is considered to be at its highest point. okay, is considered to be at its highest point. And so it's okay for you to begin to look out for candlestick patterns, for you to begin to look out for support and resistance, nearest support and resistance from there, where you can take advantage of the market. The RSI is just like an alarm. It's just an alarm system that says, oh, around this zone, be vigilant. Look out for where you can take advantage. Look out for where you can take advantage. That's just what it's about. That is what the RSI is all about. Okay, so let's move on from US. Let's check another index, for instance. Let's check US 30. For US 30, apply my support and resistance. Okay, so we have it here. We have it here. This is US 100, already showing you. Look at US 100, giving you a very perfect downtrend, showing you that this is a downtrend. At every retracement is an opportunity for you to be able to enter into this trend, right? Very good. Now, let us apply the RSI. And we can tell where US 100, US 30 has even given us to actually take advantage of this downtrend. Remember that we already established that US 30 is on a downtrend, right? After a couple of moves like this, we established that US 30 was on a downtrend. Very true. Now, imagine that something that is on a downtrend, imagine something that is on a downtrend now gets to an overbought region. Something that's on a downtrend gets to an overbought region, and that happened around last week. Last week, Wednesday, US 30 got to an overbought region around here, around this place here. And from there, from the nearest resistance, or after these 3 consecutive bearish candles, you now took a sell. They've actually made quite a lot of profit for yourself. You understand? So those asking about support and resistance is an indicator. You can actually get it. Just reach out to your account so I can get it. But for phone, it's not available on the phone. But I always advise that you also know how to locate support and resistance by yourself, even with looking at the chart yourself. Like for instance, now, if you see this current candle, look at all this place from year to year, you will notice that there's a resistance here. Price has been ranging around here and it's not been able to break above here. So it tells me that there is a resistance here. It tells me there's a resistance there. So a resistance and a support is very easy to detect. All you need to do is, once you see price has moved up to a point and you just have 3-4 consecutive candles just trading around the same place, all of them having shadows around the same place, it tells you that there's a resistance around that point and price is likely expected to come down from there. You understand? So that's what I'm talking about. But that is how the RSI works. You can use the RSI to determine where to enter into the market early enough. The RSI is not a kind of instrument that will be giving you signals every day. No. Let me explain that. RSI is not a kind of instrument that will be giving you signal every day, but it helps you, especially for those who are long-term traders, those who are swing traders. It helps you to be able to enter early on a trend. You understand? It helps you to enter early on a trend. So it's really useful. It may not be useful every day. You may not get it every day, but it can benefit you to a point where you can actually make very good profit for yourself, as we are seeing on the screen. So I've said that when your RSI is overbought or oversold, there are things to look out for before you enter into a trade. The first thing I've talked about that you need to look out for is what? Support and resistance. Okay, because if your RSI is telling you that price is overbought, okay, it is better to take a sell from the nearest resistance. So if my RSI tells me price is overbought, I will not immediately jump in on a sell, but I'll be waiting to see the nearest where the nearest resistance is, and from that nearest resistance, I can take advantage of a sell as price falls back down. If the RSI is oversold, okay, I can get access to that particular move from the nearest support. From the nearest support, I can take advantage of a buy when RSI is telling me that price is what? Oversold. Okay, so it's as simple as that. For instance, now, if you look at this is US 30 and this US 30 on 4 hours, this US 30 on 4 hours, you can see how that around this zone here, around this place where price came down and our RSI was oversold, if you consider the closest resistance, that place was a support, and from that support there, it would not have been bad to actually take advantage of what? Of a buy. Okay, so well, RSI and stochastic, they are both they both help with the same thing, and that is overbought, oversold. They are both oscillators. You understand? So that's overbought, oversold. I'm just explaining the RSI here. People also use the stochastic to tell when price is overbought or oversold. You understand? So yes, you can apply that to your chart and see how it works. You understand? I think it's also something that should actually work, especially since it tells you overbought and oversold. Okay, but I use the RSI, the relative strength index. Okay, let's continue. So I was explaining how that just to wrap it up with the RSI strategy. RSI is important, but you're looking out for the 30 and the 70 zone. When price is at the 30 zone, look out for the closest resistance. The closest resistance is where you want to sell from. You can even apply a sell limit to that place. The closest resistance is where you want to sell from. You can even apply a sell limit to that closest resistance. Okay. When price is oversold, the closest support, okay, price is oversold, the closest support is where you want to take your buy from. The closest support is where you want to take your buy from. When price is oversold, like this, the closest support is where you want to take your buy from. Because that means that oversold means that the strength of the sell is reducing. So there's a high chance that from the closest support, price is going to go back to the upside. Okay, it means that price is likely going to go back to the upside. Okay, good. So let's move on from there. And what we are going to do now is we're approaching the afternoon trading session. So we are going to do our analysis on each of those indices with in preparation for the 230 market move. Okay, we're going to look at each of them one by one to prepare for the 230 market move. We're also going to consider currencies and commodities also, for the sake of our trading volumes. The situation where the RSI is close the 50% from down. Well, for this particular, if normally you're told that if RSI is below 50%, you should looking out for a sell. If above 50%, you should looking out for a buy. That's good. But that particular 50% does not relate to what we're doing today, in the sense of entering at the beginning of a trend that's just about to form, or the sense of entering at the end of a trend. You understand? For that, the 30 and 70 is the best. That's why even for that, I did not apply 50 on my chart. The 70, the 30 and the 70 is the best when you're talking about a rejection. Chika, please calm down, calm down and listen and learn what we're doing here. Okay. Let's continue. Now we will begin with US 100 since we already started with that. Begin with US 100. Okay, good. So analyzing US 100 for the 2:30 session today. Let's have a chat. Good. So you see how even with that push up in the market, we still had this verified resistance. Showing US 100 at what is it? What do you who are you? Who you? Okay, so what does that mean for us? Let's look at US 100 from the daily time frame. Let's look at US 100 from daily time frame, see what this is all about and what can be done. So as I stated first, US 100 is now has formed a double bottom on, first of all, sorry, even before that, let's look at the dollar. Let's look at the dollar first of all. Okay, now when you look at the dollar, you can see how well the dollar has actually pushed up. Imagine how during the last CPI we talked about, I still have this my green line here where I marked and said we should be expecting to look out for a buy from that zone, and that's quite a number of pips from there to where we are now. So the dollar index has really been bullish. It has really bought for a while now. And that thing you have to notice is that at a point, the dollar index was going to form a double top. At a point, the dollar index was going to form a double top here. We had it here, and at the point, we had it here. So we were actually I personally was expecting from this point that there will be a retracement to the downside before the dollar can gather more momentum to push back upwards. Okay, that was my expectation. But the truth is that as it stands, the dollar was able to trade above that resistance on the daily time frame. It was able to break above that particular resistance. So there is a high chance that especially if today's candle still ends bullish, or if today's candle still settles around where yesterday's candle was, there's a high chance that the dollar will still continue to push further upwards. Okay, there's a high chance. It really depends on what it does today. If it gives us a higher price from yesterday, then there's a high chance that it will continue to go upwards. Okay, good. Now, if you check, because of what we've seen for the dollar index, and considering the data that came out today, unemployment claims came out positive. Final GDP came out negative. Okay, good. So let's look at it on 1 hour. On 1 hour, the dollar is still supported by 50 period moving average, and so that means that there is still a high chance for price to still push up. There's still a high chance for dollar to still have strength. There's still a high chance for dollar to continue dominating global market. Okay, but let's now look at US 100. All news is not negative. This is Forex Factory. Final GDP came out negative, right? Unemployment claims here came out what? Positive, because it came out less than what was expected. That means unemployment reduced. That's a good thing. That's not negative. Okay. This final GDP price that came out negative is not even a high impact data. Okay. So as it stands like this, if you're looking at the data that actually matter for 130, one of them was negative, one of them was positive. Okay. So that's what I believe the person that wants to check again has seen this. So let's continue. Okay. Good. So now let's go to US 100. So that's why I was saying with US 100 that it's at a double, you have a double bottom here, and we have price giving us something like a hammer at this point. So personally, I actually expect, of course, yes, US 100 is on a downtrend, but I expect more retracement. I expect a higher level of retracement on US 100 than what it is actually doing now. You understand? I expect it's just that the 50 period moving average is the problem right now. 50 period moving on 1 hour. See how it has been rejecting price. 1, 2, 3, 4, 5, 6. So it's sorry about that. So it's been rejecting price, the 50 period moving average. So what does that mean for us? That means that we will have a litmus test for what to do regarding US 100. We have a litmus test for what to do regarding US 100. US 100 has found itself stuck around here. US 100 has found itself stuck around here. Okay, so it's pushing up, it's pushing down around this zone. This is the third time it's touching this weak support. This is 15 minutes, by the way. From here was rejected here, from here was rejected back, from here also the same thing. Okay, so it tells us that at this point in time that US 100 is at a point where, oh, very good. Now, this is another thing that we should notice. You notice that as it stands now like this, US 100 has given us 2 consecutive bearish candles below the 50 period moving average on 15 minutes. Remember that it has given us 2 consecutive bearish candles below the 50 period on 15 minutes. So what does that mean? That means that there's still a lot of bearish pressure in US 100 market. There's still a lot of bearish pressure in US on the market. So what I would advise today to trade on how to trade US 100 is I personally will be looking out for a sell on US 100, especially when it trades below this week support. Especially when it breaks this week support. That's what I would expect. Okay. So for US 100, I will be looking at selling. I'll be looking at selling at 14,670. 14,670. Okay, my sell at 14,670, and then I should consider coming out at 14,640, right? Here I should consider coming out at 14,640. 640. Then maybe for my buy, whatever I'm going to be doing for this buy is still going to be within this weak resistance. So, and for my buy, I will be taking that buy at around 14,740, around 14,740, 745, 14,745, and then I'll be coming out at 14,770. So 14,745, thereabouts, and then I'll be coming out at 14,770. Okay. So let's move on from US 100. Let's go to US 30. Okay, so we have US 30 here, and let's look at what it has for us. Okay, good. So if you also check US 30 on the daily time frame, see what it has for us. US 30 has also sold, but yesterday gave us this candlestick pattern on the daily time frame, and that's not a joke. The fact that it gave us this hammer the same way US 100 did, and it's approaching its own down, its own oversold region, it means that we have to be careful. We cannot take our sell entry at a lower price anymore. The best place we want to take our sell entry is at a higher price. That will be the best to do, right? So for US 30, if I'm going to be trading US 30, if I'm going to be taking US 30 at the for a buy, okay, I'm going to be coming in at 33,920. 33,920, 33,920, and then I should come out at 34,030. Okay, so I should take my buy at 33,920 and then come out at 34,030. Okay, that's what I would do for my buy. But for my sell, look at this verified resistance, the inverted hammer, the confirmation pattern there. It still shows that there is a lot of bearish pressure in the market. There is a lot of bearish pressure in the market. So what I would advise to do, just the same way I did with US 30. Okay, just the same way I did with US 30. I'm going to be coming below this untested support here. Going to be coming in below this untested support at around 33,670. Coming in at around 33,670. Take profit at 33,610. 33,670, come out at 33,610. That's for my sell, okay? Because I see for US 30, the daily time frame is showing us that there is likely going to be further pullback in the market. Okay, pullback in the market, but you can see that for the high part of today, price has been ranging around this place. So once there's a breakout, we expect a much larger move in the market. Okay, we expect a much larger move in the market. So if price buys towards this verified resistance, from this verified resistance, I can look out for a sell from there. You understand? If price trades towards this verified resistance, that's 34,070. From that 34,070, I can actually look out for a sell from there. But for the sake of the beginning of the session, 33,930 for your buy, 33,930 for your buy, and take profit at around 34,030. Why for your sell, you're looking at it at around 33,670, take profit at around 33,610. 33,670, take profit at around 33,610. Okay, good. Okay, let's move on from US 30 and let us check out. Let's check out US 2000. Okay, so this is US 2000 on the daily time frame. On the daily time frame, we have this after this further sell, we have this this range. to show that price wants to what? Price wants to try and pull back. Okay, pull back. You know, price is actually giving us a bullish move in the market. Price is giving us a bullish move in the market. It's just the index market seems to be telling us like price is expecting to push back up. You understand? Price is expecting to push back up, you know, make a major retracement. And that's why you find out that US 100 has been battling with this zone, at least for today. US 2000, sorry, has been battling with this zone at least for today. Okay. My advice for US 2000 will be this: use the 50 period moving average on your chart. Okay. Normally I would expect to look out for a sell. Normally I expect to look out for a sell at around 1784 on US 2000, around 1784, and come out at 1780. 1784, come out at 1780. That's what I would naturally expect. Okay, 1784, come out at 1780. But I expect US 2000 to still go back towards this proven resistance. You never know. You understand? Towards this proven resistance. That's what I would actually expect. So for my sell will be at 1784.5 or 1784 zone, and I'll be coming out at 1780. Okay, so especially since we have this long bearish candle, this engulfing candle, you know, is very high, it's highly likely that price could actually sell further. Okay, and that's why for my buy is going to be above this proven resistance. My buy is going to be above that resistance, and then I'll take profit before this next resistance. So I can enter my buy at around 18,003. Sorry, 1,803. 1803. 1803. I can enter my buy at around 1803 and come out at around 1808. Okay, come out at around 1808. But personally, I still with the way these candles are doing, if US 2000 even buys to this verified resistance, 1810. 1810. If it buys to around 1810, I'll still look out for a sell from there. So that's it. That's for US 2000. Okay, so let's move on. Let's check out gold. Okay, this is gold. Let's look at gold on the daily time frame. Gold has really sold, and I feel happy that this is some of the things that we actually expected for gold, this fall in gold, because of the fact of the strength in the dollar. Okay, but if you check out gold this today, you see what gold has been doing. Sorry. Okay, so see what gold has been doing throughout. Today, gold has been within this bound here. That's what it has been doing around this zone here. It has been trading between 1871 and 1878. So it has been around 1871 and 1878. Now that means that, and you see that even that fundamental was not able to break it out of that zone. That fundamental was not able to break it out of that zone. So gold is still ranging around that zone. Okay, so what does that mean? It means that it will be easier for us to take our trades above or below. We can use pending order. This particular zone is so your pending order, your buy stop can be above 1879. You can place your pending or your buy stop at 1880. You can place your buy stop at 1880, and you know, just come out at 1884 or 1883. You understand? So yes, so you can enter at 1880, come out at 1883 for your buy. Okay, because of the range in the market. Although I expect gold to sell, personally I expect gold to sell, so I can look out for a sell at 1871. Look out for a sell at 1871, and you know, come out at 1868. Look out for a sell and 1871 and come out at 1868. That's how I will likely trade trade gold today. Okay. I personally still expect gold to sell. Yes, it has given us even US 100, even US 30, yeah, they've given us that bullish, like they're going to start pushing up. But with the way the candles have been performing for the since morning, just looking like they still want to sell further. You understand? It's looking like they still want to sell further. That's why I'm actually giving out yes, please, what's US 100? It's an instrument. It's an instrument like Euro USD, but it's a stock. It's made up of about 100 stocks, and that's why we call it an index. Okay, so let's move on from there. We have checked US 30, we've checked gold. Let's check out GBP USD, for instance. Okay, so GBP USD, let us have a clearer chart so that we can see you. Show yourself. Okay, good. So this is GBP USD on the daily time frame. You can see how it has also sold. We're not surprised for all this, okay? We're not surprised about all this because of the strength of the dollar. Okay, but if you check, even GBP USD has also approached a zone where it seems like it's about to begin retracing against the dollar. But if you check the past 1 hour candle, we had this long bearish pattern. Even when the data came out, one came out positive, one came out negative for the dollar, we're able to see this fall in GBP against the dollar. So there's still a lot of strength in the dollar. There's still a lot of strength that we have in the dollar. So what I'm going to advise for GBP USD, for GBP USD, I advise that you use your 50 period moving average. Because really, if we want to begin to give entry and give prices here, there's a high chance that we may just have price trigger and we are stuck. So put your 50 period exponential moving average on your chart and wait for price to break above it consecutively twice and buy, or for price to break below it consecutively twice, and then you can sell. You understand? So yeah, please just stay on the line just a minute. Just give me 1 minute. 1 minute. Yes, I'm back. Sorry about that. Had to um fix my system. Yes, so talking about GBP, I said 50 period, right? Let it interact with the 50 period and we see where that goes for GBP USD. Let's interact with the 50 period and we see where that goes. Okay. Let's look at oil. Oil has been showing itself, just sorry about it. Oil has just been giving us bullish move. It's been pushing up. You know how oil is majorly controlled by demand and supply. But from this inverted hammer here, let me zoom in. when we actually analyzed this chart and we looked at this and we said we expected oil to actually fall. Okay, and so oil did that for a day or two, and tried to actually continue to the upside. So right now oil is at a point where it's looking to make like a double top around that place here. Okay, so if you look at, if you ask me about oil, what I think about oil, I feel like, yes, I feel like with oil, it's likely going to still fall further. It's likely going to still sell further for oil. You understand? It's because of the fact that it's a commodity that deals a lot with demand and supply. So at a particular point, the price becomes too much, and because of that, demand begins to fall. You understand? Demand begins to fall. So here we go. So as it is like this, what we are going to do is, I personally still expect oil to sell further, but we have oil at a minor support, at a support zone here. You understand? We have oil at a support zone here. So for oil, which is a no-brainer, I'll just be looking at selling oil at around 93.30, 93.30 for oil, and then I will come out at 93. Come enter at 93.30, come out at around 93. If it sells further, it should approach this verified support at this point here at 92.70. There's a verified support on 15 minutes at 92.70. Okay, so it should come to that point if at all. Okay, but since it traded, gave two consecutive bearish candle below this thing, it has been, has been on that particular low point there. So even if it goes back towards this 50 period moving average, I can still take a sell. From my 50 period moving average, I can take a sell. I actually still expect a further sell on oil. So I'm looking at 93.30 and coming out at around 93.00. That's for my sell stop. Okay, if I'm using pending order for my sell stop. For my buy will be at around sorry about that. My buy will be at around 94.50. Around 94.50, and then I want to come out for that buy at around 94.80. Okay, 94.50, come out at around 94.80. Around this zone here, you can look out for a sell. Around this resistance, anything that makes oil instead to come up, buy and get to this point here, this 95.00, can still look out for a sell from there, because I still expect a further fall in oil. Okay, let's look at more currencies. Let's look at more currencies. USD CHF. USD CHF. Okay, so if you look at USD CHF, of course it's been on an uptrend, considering the strength of the dollar. Looking like there's some retracement that we've had as at today, especially from morning to now. We've had some level of retracement, and with the data that came out the past hour, that also kind of weakened the dollar. Okay, so looking at it on 1 hour, we have our verified support around here. So this is what I would advise. For USD CHF, we have our verified support around here, and this is where I would advise for also look out for a buy from. For USD CHF, we can look out for a buy from 0.91460. 0.91460. Once price comes towards this support here, let's look out for a buy from that point, at least 10-20 pips. Okay, at least 10-20 pips. 0.91460. 0.91460. Okay, so that's personally that's what I will consider. Okay, on USD CHF. Let it retrace towards this place, and then I can take a buy. Okay, the 50 period is still the one rejecting price, serving as a support here. 50 period is serving as a support. So Let me see if I have up to 10 pips from the top of this candle to my verified resistance. Oh, yeah, we do. So we can also take advantage of that. You know, we have our buy at 0.91460. That's around the verified support. But if it starts to push back up from this place, I can look out for my trade from 0.91977. 0.91977. 0.91977. I take profit at around 0.92142. I'll take profit at around 0.92142. Zero point 0.92142. Okay. Let's look at more currencies. Okay. AUD USD then. Let's look at AUD USD. AUD USD. We have the same story with these guys. I still feel like the strength of the dollar is likely going to continue. But if you check them, we happen to have like a level of retracement in the market. We have a level of retracement in the market. So for AUD USD, in terms of what will likely trade now, you know, in terms of what will likely trade now, I will be looking out for a sell on AUD USD around here. Let me show us. I'll be looking out for a sell on AUD USD around here. A sell on AUD USD around here, at least 10-20 pips. That's around 0.64060. 0.64060. 0.64060. That's where I'll be looking out for myself from. If it approaches this place, I expect it to sell back. Or even if it approaches this verified resistance at 0.64280. If it approaches this verified resistance at 0.64280, I'll still be looking out for a sell from there. I'll be considering a sell from there. Okay. So let's do a quick recap. Some of the things we talked about. A quick recap, we talked about the dollar index seems to be trying to retrace, but the 50 period here is holding it back. So there's likely to be strength in the dollar, okay, except if it breaks this 50 period moving average, which it has found difficult to do for quite a while now. Okay, so if it breaks it, that means that the index market will still push up. Okay, then for US 100, and because of that, for US 100, we noticed that in US 100, we've had consecutive bearish candle below our 50 period, and which is like a very, on 15 minutes, we're seeing a strong sell pressure. But we noticed that on the daily time frame, there was something like a hammer yesterday, which should actually be confirmed, okay, today, if today closes bullish. If today closes bullish, and that's why we decided that we're going to look out for a sell at 14,670, come out at 14,640. Okay, that's what we said. And then we said we look out for a buy at 14,750, come out at 14,770. Okay, that's what we considered. That's what we considered. We also looked at the fact that the last couple of times our price came back towards this verified resistance, it was rejected back. It was rejected. So if price buys towards this resistance at 14,800, you can actually scalp a sell and take advantage of that. The only time we'll now be looking out for more of the buy on US 100 is if price can break above 14,820. If price breaks above 14,820, then you can continue buying. But for now, a sell at 14,670, coming out at 14,640. Okay. A buy at 14,750, coming out at 14,770. Then for GBP USD, we said to use our 50 period moving average, right? That's what we said. Then for gold, when we looked at gold, we looked at gold at 1871 to come out at 1868. We said this place here, price has been ranging around here. So we said we'll take advantage of the breakout. 1871 to come out at 1868, and for the buy 1880 to come out at 1883. Right? For oil, what did we do? For oil, we looked at it at 93.30. 93.30 for the sell stop. We take profit at 93.00. And 3.30, take profit at 93.00. And then for our buy, we looked at 94.50, take profit at 94.80. 94.50, take profit at 94.80. What did we do about US30? US30, we also gave 33,678, take profit at 33,612. For the sell stop at 33,678, take profit at 33,612. Why the buy stop at 33,930, take profit at 34,035. The buy stop at 33,920, take profit at 34,035. So we have movement in the market. It's 2:30. US session will actually begin now. Okay, US session will begin now. Especially from 2:35, you see a faster move in the market. Okay, let's see if we do not still have any of our, no write-up. There's yes, I did not give Euro USD. I think I gave instant execution a limit order somewhere. I think for AUD USD. I said for AUD USD, if price buys towards 0.64060, you can take a sell from there. Right? That's what I said. Which one again? And USD CHF, yes, USD CHF. I said for USD CHF, I didn't give a pending order for USD CHF. I said for the sell, if price sells towards the verified support at 91490, around that zone, you can take a buy from there. Yeah, and take a buy from there. That's what. Then I gave us a buy stop above in case it doesn't, but it looks like it will likely go towards that sell first. Okay, looks like it will go towards that sell first. GBP USD. Okay, what did we say about GBP USD? I just repeating, so it's just like new people are joining. GBP USD, I said to use our 50 EMA. Put 50 period exponential moving average on your chart and use that to decide or determine what we'll do. In the sense that, because if you look at GBP USD to further explain, sorry. Okay, good. If you look at GBP USD, we got this inverted hammer, this strong, this not inverted hammer, this bearish engulfing candle, which should actually show more of a sell to GBP. Okay, so that's why we said that we're going to confirm it with our 50 period moving average, especially when price breaks below the 50 period. We can take advantage of that. You understand? That's what we said. Okay, I just mentioned AUD USD. I just mentioned AUD USD. US 100 is most likely going to sell for that. We have our US 100 at 14,670. Take profit at 14,640, right? Good. For Euro USD also, let's see how many pips we have from here. About 14 pips or thereabouts. Euro USD has not really begun to make a move, and you would notice that, okay, we have a clearer chart here. It is still, okay, this is what you do for Euro USD. For Euro USD, have your 50 period moving average on your chart and check it on 1 hour. Wait, let me put it. I just saw something interesting just now. Okay, good. So we have price currently trying to trade above this particular place. So for Euro USD, this is what I'm going to advise. We should be looking out for a sell around this zone here. Around this zone here, where this verified resistance is. So we should be looking at once Euro USD, if Euro USD buys to 1.05720, 1.05720, 1.05720, can look out for itself at that point, and then 10, 20 pips in profit. 10, 20 pips in profit. That's 1.05720. That's what we want to consider. Okay. What do you say for gold? For gold, we gave 1871, 1868. I just want to state something. I see how I will always say this thing so that you can remember that anytime this voice speaks, it's always saying this thing. I see how interested we are in the entry and the take profit, and I feel that we are not as interested at the early hours of the class when we are talking about strategies. Okay, this take profit now just 10 pips. They will not make you rich. But I hope we're able to learn from the RSI, and hope we're able to learn from some of the strategies that we talked about. Okay, that's very, very important. That's even more important than this. So it seems like on this US session, the dollar might likely keep falling. So what that means is that we might likely see further bullish move for some of these instruments. Okay, if the dollar continues selling, please listen. If the dollar continues selling, okay, if the dollar continues selling, US 100 may likely, push up. Remember that we have US 100 at 14,750 to take profit at 14,770. Right, but the most important thing is that if the dollar, look at US 100 trying to form like a resistance or trying to form like a hammer on this support zone here. Okay, so if it does not, I think it even triggered for those people that are spending on that, those who are waiting for it to close, they're not in the trade yet. But if that dollar continues to fall, US 100 will likely push up. And remember, please don't forget that most importantly for US 100, we have given ourselves, whether we trade or not, whether we are in the market right now or not, I think there was somebody who was on a sell on US 100. There is a sell entry I want you to look at. I want you to consider at around 14,800. 14,800. Anything that still makes US 100 to push up towards this verified resistance, from this verified resistance that is 14,800, I would advise that you look out for a sell from that point. I would advise you look out for a sell from that point. Okay, so that's what my advice will be. Okay. Please return to gold. Okay, gold 1871, take profit at 1868. The buy stop at 1880, take profit at 1883. Okay, that's what I expect. Okay, yes, so please do not forget. Now, these trainings, like this particular class was recorded but also streamed live on YouTube. Okay, that was streamed live on YouTube. So I want to drop the link now. Once you join, if you click on it, it will take you to our YouTube channel where you can get access to these details. You understand? You can get access to these details. Okay, so I just dropped it. So you can get access to that. Okay. What do you think about USD JPY? I have a particular network of traders who have been expecting USD JPY to retrace majorly, to fall back down, but the problem is, in as much as the dollar is strong, the dollar seems to be much stronger than JPY because they have refused to consider interest rate hike. You understand? So that's why I will always, if you ask me for USD JPY right now, I'll always give you a buy at any close support. Okay, so I feel like for USD JPY, even if it retraces towards towards this particular place, this 149.120, if it retraces towards this 149.130, I would still look out for a buy from there, except it breaks its place. If it even retraces towards this 148.750, you see this place here, this 148.750, I'll look out for a buy from there. I'll look out for a buy from there. You understand? So that's what I think about USD JPY. So I've dropped the YouTube link. I've dropped the YouTube link. Please, you can go through some of the things we talked about and use them. I'm sure that those information will do you well. You understand? They will do you well. You'll be able to do very well with them, even beyond the entries. Okay. And then on our YouTube channel, once you click on this, and you can also drop comments. You can drop comments regarding what you do not understand in the videos and all that. Those are things that we'll actually look at, and then we will attend to you. Do not forget that this particular link, this link that you have joined with is used. This is the link we use for all our analysis sessions. So in the morning by 8 o'clock, we use this link for the morning market review. In the afternoon, we use this link by 2 o'clock for the afternoon live trading session. But on Wednesdays and Thursdays, we start an hour earlier. So in the afternoons, Wednesdays and Thursdays, we start by 1 o'clock so that we just do some analysis, technical analysis, learn some new thing about the market, and then move on. Yes, we'll be having something interesting tomorrow. We'll be having something quite interesting tomorrow. On Zoom tomorrow with this same link. On Zoom tomorrow. Please listen. With this same link, Zoom tomorrow, we'll be having our online traders forum. We'll be having an online traders forum. Let me not bite my tongue. Having an online traders forum by today. Sorry, tomorrow by 10 a.m. 10 a.m. with this same link. So what that means is that we'll be having one of our experts where you'll be able to ask questions here, and we'll be able to discuss about the business and a whole lot. Okay, so this same link, 10 a.m. tomorrow. After the morning market review for tomorrow, we're going to have this class. Okay, online traders forum. So do not forget, and do not say you were not told. You're here now. So with this link, the link that brought you to this meeting, we're going to be having an online traders forum. That's where you your forex trading related questions will be answered in that forum. Okay, forex trading related questions will be answered. Now, for some people that want to understand what is spread, what is this, why does this work like this, why doesn't it work like this, why is it like this, why is this like this, you will be able to answer those questions at that forum tomorrow. So 10 a.m. is the time. Please make sure that you do not miss it. Okay. I asked a question on currency strength indicators. Can it assist us in technical analysis of trend? Well, currency trend, people ask me about currency trend indicator, and I always advise that currency trend indicator it just tells you what the current strength of currency is, and that strength can change at any point in time. That's just what I personally believe. Like, it can change at any point in time. So what I use in the trading currency is just fundamental analysis, fundamental analysis, technical analysis, and all that. But if you're talking of the currency strength meter, I think the website for that, I think there is one I know of, LifeCharts, lifecharts.co.uk, lifecharts.co.uk. Okay, livechat.co.uk. I think that one is the one that you can use. Okay. So yeah, there are others. There is even like, I think there is an indicator surrounding that. Some people have an indicator where you have on your screen and can give them the strength of the currency. You understand? So yeah, you can actually use that. Can use that. But what I'm just saying is that no matter what they're giving you at that point in time, always try as much as possible to relate it with technical analysis. Try to relate it with fundamental analysis. You understand? That is what can guarantee your safety in the market. Okay. Yeah. So I think we would take a pause here. Please, if you have not gone through the what's this stuff now? The EMA method, the EMA scalping method that we talked about. That is, for me, I want you to actually take advantage of that. That will really benefit you. The EMA scalping method, where once you have 2 consecutive bearish candles below your moving average, you can look out for a sell. Once you have 2 consecutive bullish candles above your 50 period moving average, you can look out for a buy. You understand? Here. So that is what I want you to just check YouTube. We had 1 or 2 sessions about that. Go just comb through those topics. I'm sure that you would find them there and you will find them very useful. Okay, so I think it's a fine place to leave it for today. Of course, there will always be question. I just have to get to one point and say, I'm going, bye-bye. AUDS got up to that point, but not exactly the point we marked, before retracing back down. But just watch it though. Watch it. If it gets towards that place, it's a good place for you to actually take advantage. So yes, recorded version is still, just go to YouTube. Okay, head over to YouTube with the link that I dropped, and then you can get access to all those materials. Okay. I think it's a fine place to leave it. Thank you all for your time. Do not forget that tomorrow we'll have a session by 10 a.m., the online traders session. So if you just know that if you're joining 8 o'clock class tomorrow, you're going to follow with the online forum. Okay. Yeah. So let's look forward to seeing you at that event tomorrow. Thank you for your time. Bye for now.